Welcome everybody to another Bond Boot Camp. I'm Marilyn Cohen.
And I'm Alex Anderson.
And we're from Envision Capital Management. We manage bond portfolios for individual investors. Alex, today we're going to try to take on a really complicated issue for do-it-yourselfers and for taxpayers in general, and that's Puerto Rico.
Yikes.
That's a good beginning. So you all know Puerto Rico was allowed to go bankrupt, even though the Constitution said that it couldn't. U.S. Congress said, fine, let it happen. And now we are in a quagmire. The Obama administration elected and selected a group of people to run the bankruptcy proceedings in Puerto Rico. And Alex, that has been a mess since day one.
Absolutely. Puerto Rico has been a huge source of problems.
And the reason why I think that this is a quagmire and it's really important for bondholders and individuals that pay taxes to know about it is because the bondholders, as you know, in Detroit got stuck holding the bag, and the Puerto Rico bondholders are getting double stuck holding the bag. You want to talk a little bit about that?
Sure. Well, I just think overall, if you look at some of these municipalities that are in distress, you'll see that the rules do not apply anymore when it comes to bondholders getting repaid.
Exactly. And Alex, 40 years ago when I started in this business, owning a general obligation bond was the creme de la creme because they had the unlimited ability to tax the electorate and pay the bondholders. Well, that's no longer true, as we saw with Detroit, and it's certainly not true and been desecrated with Puerto Rico.
Absolutely. The traditional constitutional protections that we see with normal bond issuances are being thrown out the window right now.
Oh boy.
And we're seeing it with Puerto Rico.
Exactly. So the topic of the general obligation bonds of Puerto Rico encompasses $6 billion of bonds, $3.5 billion which was issued in 2014, and the rest that was issued in 2012. So you'd think, no problem, they're all GOs. Well, no, it was a big problem. Do you want to give the history of that?
Well, sure. What they're trying to do is they're going to give a haircut, a bigger haircut to the issuance, the buyers of the issuance that bought them more recently. So the ones that have had the longer issue are going to get paid back more. So it's an unequal payback for both issues, and that shouldn't apply because it's both are general obligations.
And you should be sitting there saying, how the heck can they get away with that? Well, because now when the rubber met the road, the city-state and the island state of Puerto Rico said, oh, we issued these and they were unconstitutional because we exceeded the limit that we could issue in general obligation bonds. What a whitewash if I ever saw one.
And what's so interesting about that is they deemed that issuance was invalid, but they're not going to reverse it and give all the money back to the bondholders. They're just going to stiff them.
They spent it. Exactly. So you have a lot of litigation going on, and now it's going up to the Supreme Court. Not whether or not the bondholders get paid, but about the constitutionality of the group of people that were hired by the Obama administration to run everything. And if I can say one thing that is the gospel, that is Puerto Rico is a criminal operation from head to toe, from the people that run the treasury to the people that ran the island into the ground to everybody.
Mismanagement and corruption all around, in my opinion.
Exactly. So I guess the good news is we're going up to the Supreme Court, and if the Supreme Court, well, I guess not if, whatever the Supreme Court rules, there'll be more litigation at the lower levels about other things rather than just the group of people that are running Puerto Rico. Bottom line is, stay away from general obligation bonds because this is just going to be the template for what we see that's going to happen in our most unfavored states.
I totally agree. I think the reverberations you're going to see in general obligation issuances is going to be negative. People aren't going to look at general obligations the same way they have in the past, which is strong, because they're not.
And next up in the queue will certainly be Illinois and probably Connecticut and certainly New Jersey and the city of Chicago. It's all a mishmash. So do not believe just because they say GOs are sacrosanct that they are.
They're not.
I'm Marilyn Cohen.
And I'm Alex Anderson at Envision Capital Management in El Segundo, California. We manage individually managed bond accounts. Thanks for joining us.